Two investors, same budget, same goal, which is to build wealth through property. Now, one buys an established home and holds it for 10 years. The other develops, knocks down, builds, sells, or keeps. 10 years later, who is ahead? The answer might surprise you because this is not as simple as most people make it sound. Today, we are going to break down both strategies honestly so you can figure out which one actually fits your situation. Hi, I'm Ankit from ValueNest Buyers Agency, and I specialize in research-led property investment strategies. I help property investors make confident, data-driven decisions by focusing on numbers and fundamentals, not just the headlines. So before we get into the numbers, let's define what we are actually comparing today. First one is buy and hold. You purchase an established or near new property, rent it out, and let time and compounding growth do the heavy lifting. Minimal involvement after settlement. Second one is construction projects. This could mean a knockdown rebuild, a duplex, a townhouse development, or a subdivide and sell. You are actively creating value rather than waiting for the market to deliver it. Both are completely legitimate. Both have made people very wealthy over the last few years, but they suit very different investors and very different risk profiles. Now let's go through both of these. Let's start with buy and hold because for most investors, this is where the journey begins. The core appeal is simplicity. You buy a well-located property, you tenant it, and you get out of the way. Over time, three things work in your favor. First, capital growth. In strong markets, well-selected properties have historically doubled in value every 10 to 12 years. You don't have to do anything for that to happen. Number two is rental income. Your tenant is effectively paying down your mortgage while you sleep. Over time, rents rise and your yield improves as well. Number three is leverage. You are controlling a 900K asset with maybe a 180K deposit. The bank is doing the heavy lifting. And the tax treatment is straightforward. You understand your obligations from day one. The emotional benefit is underrated too. Now, once you are in, you are in. No project management, no builders, no council approvals. You can hold a full-time job, raise a family, and still build wealth passively. For investors who value their time and mental bandwidth, buy and hold is a genuinely powerful thing. Now, let's look at the limitations around buy and hold. It is not a perfect strategy. You are entirely dependent on the market cycles. If you buy in the wrong suburb at the wrong time or at the wrong price, the market won't save you. Time helps, but it is not a cure for a bad purchase. Growth can be slow or uneven. Some markets sit flat for 5, 6, 7 years before moving at all. And if you are relying on equity to fund your next purchase, that can stall your entire strategy. Cash flow can be a squeeze as well, especially in the early years. Holding costs, mortgage repayments, rates, insurance, maintenance, property management can put real pressure on your personal finances. And the most uncomfortable truth is buy and hold is a long game. If you need to accelerate your wealth, if you want to compress 10 years of growth into 3 or maybe 4, buy and hold probably isn't the vehicle. Now let's talk about construction and specifically why experienced investors are drawn towards it. The fundamental difference is this: in buy and hold, you wait for the market to create value. In a construction project, you create the value yourself. Here's how that works in practice. Now, let's say you buy a tired house on a 700 square meter of block for 850K. You get a duplex approval, knock it down, and build 2 brand new duplex. Each duplex is valued at 750K upon completion. Combined value is $1.5 million. Your total cost, including land, construction, holding cost, fees, is around $1.2 million, give or take. Now you have manufactured 300K in equity in roughly 18 to 24 months. This is the core appeal of construction: manufactured equity. You are not waiting for the suburb to move, you are engineering the outcome. There are other advantages too. Depreciation on a new build is significantly higher, meaning stronger tax benefits in the early years. You can choose to sell one and hold one, recycling your capital while keeping a long-term asset as well. And if you sell, you are selling a brand new product in the market where new stock is scarce. That's a strong position to be in. Now for the investors who want to compress the timeline to financial freedom, construction done well is a powerful accelerator. But I want to be very clear about the risks here because I have seen investors stuck badly on construction projects. Cost blowouts are very real. Builder quotes are not always fixed. Materials, labor shortages, and unexpected site conditions can push your budget well beyond projections. A 10 to 15% buffer is not optional, it is essential. Time frames blow out too. An 18-month project can become 28 months. During that time, you are carrying holding costs, which is interest, council rates, insurance, without rental income that eats into your margins very fast. Council and planning approvals are not guaranteed as well. What you think you can build on a block and what council will approve are sometimes very different things. DA rejections, neighbor objections, heritage overlays can also derail a project. So here your team is very important and it is everything. A bad builder, an inexperienced project manager, or a wrong town planner can turn a profitable development into a disaster. This strategy is only as good as the people executing it, and the skill requirement is significantly higher. Now, buy and hold is relatively forgiving. Construction projects are not. You need to understand the feasibility, planning, construction contracts, and end market values, or you need to be paying someone who does. Now let's do a side-by-side honest comparison between the two strategies. When it comes down to complexity, buy and hold has low, construction high complexity. Time commitment, buy and hold minimal ongoing, construction significant during the project. Speed to wealth, buy and hold slow and steady, construction faster if executed well. Risk level, buy and hold moderate, mostly market risk. Construction higher, execution and market risk combined. Capital required, both require substantial capital, but construction typically requires more liquidity during the build phase. So who is it best suited for? Buy and hold, investors who want passive growth, are time poor, or are earlier in their investment journey. Construction projects, investors with higher risk tolerance, more experience, access to good advisors, and the capacity to manage complexity. Let's look at the honest answer. Neither is universally better. The best strategy is the one that matches your financial position, your risk tolerance, and your time availability, and frankly, your personality. So what should you do? If you are earlier in your investment journey, if this is your first or second property, buy and hold is always the right starting point. Get a high quality asset in a growth corridor, build equity over time, and learn the market without taking on unnecessary complexity. If you have already got equity behind you, you understand how property works, and you want to accelerate, then a well-structured construction project could be worth exploring. But go in with your eyes open, be conservative, create a feasibility and rock-solid team. And for some investors, the answer is both. Hold your established properties for long-term passive growth and use a development project to manufacture a lump sum of equity that supercharges your whole portfolio. That is not a bad strategy at all. At the end of the day, property wealth is built through consistency, patience, and making decisions that suit your situation, not someone else's highlight reel. So buy and hold works, construction also works. What doesn't work is jumping into a strategy you do not understand, with a team you haven't vetted, on a timeline you can't afford. If you are trying to figure out which path makes sense for where you are right now, that's exactly the kind of conversation I have with buyers every week. Drop a comment below, buy and hold or construction. I would love to know where you are leaning. And if you haven't already, please subscribe, because this is what we talk about every week. Thank you for watching this video. See you in the next one.